What's going on, everyone? Today in this video I'm going to be talking about the RSI indicator. The RSI indicator stands for Relative Strength Index. It's a momentum indicator that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock. And there's three ways that I use the RSI indicator. So as you can see, we have a chart above right here, and below is the RSI indicator. So the first way I use it is for normal overbought or oversold territory. So I want you to understand that anything above 70 RSI is an overbought territory, and anything below 30 RSI is an oversold territory. So this could potentially give you a sign to sell or buy. Again, it's just a study and an indicator, so don't solely rely on it, but you can use it to validate your case. And the second way I use it is for divergence, and this one's huge. So the first one is bearish divergence. So when you have higher highs in price and a lower high RSI, you get the divergence between the two, potentially giving you a sign to sell. And bullish divergence. Bullish divergence is when you have lower lows in price and a higher low RSI. Again, the divergence between the two potentially giving you a sign to buy. So lastly, I use my exit strategy. So when I want to exit a trade, there's two ways that I use it. When I get into overbought territory, I can sell as soon as I get into overbought territory, but the con for this is you can miss out on a lot of opportunities and capital gains because stocks can stay in overbought territory for a while and you can miss out on a lot of gains. Or you could wait until you get into overbought territory, and then as soon as you come out of overbought territory, then you can scale your trade or sell your trade. Again, it just depends on your risk tolerance and your management. So now I'm going to show you it on the Thinkorswim platform and how you can fully utilize the RSI indicator.
So it's never a good idea to solely rely on any indicator or study. It comes down to your understanding for what the potential is in margin for profit and your risk management. And you have to have a whole plan set up. So I want you to understand that this can support your case for what's a good buy or a sell. So let's take a look at JDST. As you can see over here, it's showing signs of downward momentum. And if you looked at the RSI indicator, it's showing that this whole time right here, while this was going down and decreasing, this whole time right here, it was below 30 RSI. And it's highlighted it in blue, which means it's on the oversold side. Oversold means that the demand is pretty high right here. So this whole time right here, the demand was there and it was showing signs that it was very oversold. So obviously stick to your basics, manage your risk, and identify the support and the resistance. And the RSI indicator can support your case. So when it's below 30 RSI, it indicates that the stock is oversold, the demand is there, and it's potentially going to be a good buy. So when it's above 70 RSI, like I said, see how it's red? It's indicating this is a good sell. Overbought means the demand won't really be there. So what I use the RSI indicator is when it comes down to my day trade or swing trade, specifically swing trade, I like to see the overbought or oversold. And if it's overbought, make the assumption that it's not the best deal right now. And if it's oversold, that could possibly pique my interest for it to potentially be a good buy or a good sell. And so to get the RSI in your studies, you come up here to the top where it says studies and go to edit studies. And simply just type in RSI. And if you want a brief summary of what the RSI is, just click the question mark to the right of it. And I already have the RSI, but this is how I have it set up in my studies. 14, 70, 30, close, Wilders, no. Apply, okay. I want you to understand that this has assisted me to help me reach to my success, and it helps me identify stocks on the oversold or overbought side. And I want you to understand that if it's close to reaching the resistance, and I see that it's on the oversold side and it's close to the resistance, that's definitely giving me a sign that I'm going to sell soon. So this margin of profit from here to here is about 45%. That's huge. So if you can identify the support and the resistance, and you be able to use the RSI indicators to your advantage and understand that it's showing that it's oversold when it gets close to the resistance, that will give you an indication that this is a good time to sell. So I hope this helped you get a better understanding how to fully utilize the RSI. If you have any questions or concerns, please leave a comment below. Thank you.